Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching Indian Open. Let's go straight to the headlines. State Bank of India will buy more loan portfolios from banks than earlier planned as it looks to pump in more liquidity into the system. The government may tap into non-resident Indians via bond sales and dollar deposits to prop up the rupee. That is a Bloomberg exclusive. Zee Entertainment kicks off the second quarter earnings season for the Nifty companies today. And US Ambassador to the UN, Nikki Haley, resigns. She was instrumental in getting North Korea to hold talks with the Trump administration. And of course, midway through all of that, Donald Trump has made some remarks on the Fed as well. But we'll get to that in a bit. First, let's take a look at what happened in the world markets yesterday and what's happening to Asian markets today. So the US markets, the European markets, not a bad close. At least for Europe, it wasn't a bad close. I think European markets did reasonably well. US markets flattish with the Nasdaq marginally in the green, but the other markets were very, very flat. European markets ended marginally higher in trade yesterday from being down at somewhere around our close. And if you just look at the Asian picture today, it's a bit of a mixed bag with a mild tick of green, I might add. There's SGX Nifty 2 pointing towards 0.25% in the green. Must say, our markets have kind of held on a little bit in the last 2 or 3 sessions. I think the only noteworthy news, aside of course, this Bloomberg feature story on how there are more evidence or how there's more evidence of China hacking into US companies, the only noteworthy thing that came out was Donald Trump once again reiterating that he thought that the Fed was on a path of moving too fast on the interest rate increases. This is something that he said a number of times in the past, actually, quite frankly, a number of times, and he's reiterated this yet again. So the dichotomy or the divergence between what the Fed is doing and what the president is thinking continues. Aside of that, as I said, a very flat close for the US markets. There's a flat close for our markets as well. The trade setup, frankly, amidst a very volatile trade, a flattish close for broader markets by and large. The Nifty ended about 0.5% odd lower. But the open interest positions on both the Nifty and the Nifty Bank came off for the October series. NBFCs bounced back in trade for sure. In trade yesterday, I don't know if there's some inkling about what the SBI is going to do or otherwise, but almost all of the NBFC stocks, without exception, bounced up in the last half an hour of trade. From a DHFL to Edelweiss to IFL Holdings or Canfin Homes, almost all of those names in the last 30 minutes had a significant bump up in trade on fairly reasonable volumes and fairly healthy delivery volumes as well. However, that didn't do anything to materially change the fund flows. You could argue that it was a smaller number of sell number in the sell side yesterday, about 1,243 crores, so nothing too dramatic. But yes, there was a sell number, and frankly, after adding yesterday's sell number, the quantum of flows that the FIs have sold out in the month of October thus far, which is the first 9 days of October, is more than the whole of September, which was close to 11,000 odd crores as well. So brutal selling in September, even more brutal in October, and I think this last 40-day period would be the highest sell number that we've seen in calendar year 18. I mean, we'll need to verify this, but something around those numbers and the pace at which the flows are happening tells me that the 40-day period would be the highest selling that we've seen in calendar year 18 thus far. Well, that's led to the rupee going further down as well. Not that this is the only factor which impacts, but at 74.38, this was the all-time closing low for the currency. The pressure on the rupee sustains as well. Stocks to watch in the session today. I think firstly, from a results perspective, the Nifty earnings kick off today. So Zee Entertainment. I don't think I've ever seen Zee Entertainment kick off the Nifty earnings season. Nevertheless, it's happening this time around. So Zee kicks off the results season. Also, a couple of other interesting numbers. Bandhan Bank in particular. Second most expensive banking stock in the world after AU Finance, but essentially a stock involved in a lot of news of its own. Numbers would be important today, as would be Indiabulls Ventures. The stock has been on a downtick now for the last maybe 10, 15, 20 odd sessions. I've not seen come off or budge from the lower circuit levels. Let's wait and watch what it does in terms of fundamental performance. NBFC stocks, and we'll have a chat with SBI as well. They've stepped up the target to purchase good portfolio of assets from NBFCs, fairly large number as well. Let's see if there's a further prop up in NBFCs today. MCX, SEBI has allowed foreign entities to participate in commodity derivatives. Let's see if this props up MCX a little bit in trade today. Nalco, and again, a management that we'll speak to later on, but they're going to consider a share buyback on October 12th. Let's wait and watch what happens here. And Graphite India, In line with what was anyways believed earlier, but now officially they've announced that they're going to halt the operations in the Bengaluru graphite electrode plant. Let's wait and watch if this brings about a sentimental pullback into Graphite India or no. However, that's the trade setup. Let's try and tell you what's lined up on First Word today. Yatin Johnson to talk about arguably the most important nifty stock in the last two sessions, and that's Tata Motors. He'll talk about what's hurting the company. Somit then Johnson to talk about IndiGo's market blues. The stock cracked below its issue price in trade yesterday, exactly 3 years post the listing date. October is not panning out to be a very different month from September, but a large number of stocks are hitting 52-week lows and with higher frequency. I'll dwell a little bit on that. And then we speak to Dinesh Khara of SBI about the lender's decision to help out NBFCs. Also remember, 19 banks have a new worry with the GST authorities seeking taxes on free services. Nikunj Ori would join in to talk about that. However, start off with Tata Motors. It slumped 13% yesterday, topping off a 59% fall in the stock this year already. The price actually touched the lowest level since September 2011 in intraday trade. This despite 68% of the analysts on Bloomberg recommending a buy on the stock. So what's slowing Tata Motors down? Yatin Motors here with an analysis. Yatin, good morning. And we spoke about this briefly, but now that you've had some time to look at why could there be so much of panic on the stock? What's the consensus? What's the analysis?
Yeah, so Neeraj, do not blame the market conditions for the fall in Tata Motors stock yesterday. Most of them mistaken, that this is a bear market and, hence the stock fell so much, almost 20% on an intraday basis. This is to do with fundamental reasons and the company's performance. And, let's talk about the recent performance which the company delivered on the JLR sales. So the September JLR sales on a retail basis were down nearly 12.5%. And if you look at the geographical breakup of this, September retail sales, we had the China sales which are down 46%, and this is despite the luxury car duties coming down in China. The company earlier in the statement said that there is temporary disruption, and the changes in the import duty structure in China have impacted sales. And even after when the duties are revised 2-3 months after that, we have the China sales which fell nearly 46%. Similar is the case with the UK and Europe sales which fell 1% and 5% respectively. And not only that, the North American market, which continues to be a very good driver for the company on an overall basis, there also the sales fell 7%. So on an overall basis, the luxury car market has been facing some headwinds there. If you look at the trend for other luxury car makers, they have not been as worse as JLR is. So JLR sales for September fell by nearly 12.5%. But look at BMW and Audi. They have delivered a flattish kind of a month of September. Of course, Mercedes sales fell nearly 5%, but that again better than the fall which came in for JLR. Of course, on a year-to-date basis also, JLR is no different. If you look at the YTD FY18 numbers, JLR sales are only up 1%, whereas we have BMW and Audi doing 2% of growth on a YTD basis in terms of volumes. Of course, they also have a very large base and, very diversified markets, so to say. So clearly, there is pure underperformance. Of course, what Tata Motors had to say is that the China sales are hit by market uncertainty due to import duty changes and the ongoing trade tensions between China and US. Of course, analysts have been pointing out various factors which have impacted the performance of Jaguar Land Rover and Tata Motors. They expect the retail volumes to grow at a challenging period ahead. UK and EU to continue to be impacted due to the decline in diesel car shares, and also the debt is expected to increase in the coming quarters. More importantly, they are planning to spend nearly $5 billion on capital expenditure and capacity expansion in the next few years. They have to get a Slovenia plant going, but this is despite the fact that they have announced a 2-week production cut at the UK facility. So current capacity is not getting utilized. You are having production cuts, and on the other hand, you are spending $5 billion on R&D as well as new plants in Slovenia. So that is something that the analyst community is wary of, Neeraj. And of course, if you look at the stock performance, stock is down 59% on a YTD basis, and 70% of the analysts have a buy rating and a target price of 353 on an average, as per the Bloomberg calculations. And despite all of these factors, we have the company which has not been able to perform that great. I will just share some data, Neeraj. If you look at the growth metric for JLR, how it was in FY15 and how it is right now. If you look at the JLR global volumes, FY15-16, the sales growth was 9%, 16%. And if you look at the UBS estimates, in FY19 and FY20, we would have a decline in JLR sales versus the growth figures that we saw in the last 5 financial years. If you look at the China sales also, in FY17 and FY18, they grew at a pace of 30% and 23% respectively. But look at FY19 and FY20, 6 to 7% is the kind of growth that UBS is estimating for the China sales as well. And if you look at the EBIT margin, so we are talking about a scenario wherein the sales volumes are declining, the growth is declining there. Also, the EBIT margin from a high of 14% in FY15, we are looking at FY19, which could close at 3.4% EBIT margin. So if you look at the margin trajectory from double digit to high single digit, the company is now coming or converging towards 3.5 to 2.5% kind of EBIT margin range. And remember, we would argue that Tata Motors on the price to earning basis could be the cheapest stock on the Nifty, cheapest auto stock in the Nifty auto. But if you compare Tata Motors to global peers, given the fact that 90 to 95% of the profitability comes from JLR, it is not that cheap. In fact, Tata Motors FY20 EV to EBITDA is 3 times versus Daimler and BMW, which are expected to trade at 1.2 times EV EBITDA. So, on the valuation front, EV EBITDA basis, if you look at FY19, FY20 and even FY21, it's almost double the kind of valuation that BMW and Daimler are trading at. So probably if you look at it from the global perspective, from the global peer perspective, I don't think so Tata Motors shares are that cheap, and that really reflects on the share price performance, which has been under pressure for the last 1.5 years.
Well, and that's compelling analysis and compelling valuation check as well. If indeed 90%, 85%, 90%, whatever the number may be over the course of the next 3 years comes in from the global business, why should you compare the valuation multiples to an Indian business, compare it to the global business, and there it's not looking as cheap. Yatin, thanks for putting this into perspective. Really interesting. And well, tells you some reasons why, not necessarily just the fall yesterday, but the fall in Tata Motors over the last few quarters, not happening purely because of the bearish situation currently, but probably happening with reason. Is the same reason true for Interglobe Aviation? Because that stock too fell below its issue price in trade yesterday, an occurrence that's happened twice in its 3-year history on the bourses. The stock price of the country's largest scheduled airliner has fallen more than 50% from the all-time high levels very, very recently. Sumit Sarkar's found some similarity between the two instances when the airline stock went lower than the listing price. Sumit, good morning.
Good morning, Neeraj. So if you see, yesterday it fell below its issue price of 765, and this was the second time since its listing that the company's share prices have fallen below the issue prices. Now, back in 2016, when the stock was recently listed, it had seen a similar kind of fall. Now, in the first 45 days of calendar year 2016, the share prices of IndiGo had fallen close to 46%. And now, recently, from its highs of around 1500 rupees, the share prices have fallen nearly 52%. And if you see the reasons that were that led to the fall back then and that have led to the fall now are somewhat the same. Now, first, back in 2016, if you see when the company has first announced its quarterly earnings, the yields of the company had come off, and that was because they had lowered their ticket prices. Now this time also, if you see, lower ticket prices is one of the major reasons that has led to the downfall in the share prices of IndiGo. In the last 2 quarters, if you see, the yields of the company have fallen by at least 5% compared to last year, because the airline company had to cut ticket prices due to competition, and that has led to the downfall back then also and in this time also. Now second is the cost structure. Now there is no doubt that IndiGo's cost structure is the leanest in the aviation industry. But if you see, since listing, barring 4 quarters, that is from the second quarter of financial year 2017 to first quarter of financial year 2018, the company's ex-fuel cost per available seat kilometer, that has never declined. Now, back in 2016, it rose nearly 12% and 10%, and now it has risen 5% and 14%. And more importantly, if you see in the last 2 quarters, the growth in this part of the cost component for IndiGo has been higher compared to other airline companies. Now third is the A320neo. Now this was termed as the game changer for IndiGo back when it was listing. Now that pre-IPO meet, the company had termed A320neo as a game changer for the company, but it has never worked for the company and it has worked always against the company. Now, back in 2016, the A320neo delivery was delayed due to some industrial reason. At least that was what the company said to us back then in 2016. Now, this delay had impacted the cost structure of the company because the company had already invested in staff and other overheads as it was expecting the aircraft to be delivered, but due to this delivery, the cost had surged up for IndiGo, and this had led to the downfall for share prices of IndiGo back then. Now, if you see for A320neo, engine issues has led to delay in delivery of this aircraft, and it also forced the airline company to ground its aircraft. Now, because of this delay and grounding, IndiGo started to lease older aircraft from the secondary market. Now, these old planes have resulted into higher maintenance cost and also higher fuel burn for the company, thereby increasing the cost for IndiGo in this time also.
So there were some similarities back then to what's right now, and there are some additional headwinds this time around as well, Samit.
So for additional headwinds, if you see, rupee has depreciated by nearly 12%, which has led to foreign exchange losses and also higher cost for the airline company. Along with this, Brent crude has also surged by almost 15%, which has resulted into higher fuel costs for the company. And thirdly, there have been a couple of big exits in the top management level for IndiGo, which has also led to the fall in the share prices. Aditya Ghosh, the former president, and Sanjay Kumar, the former chief commercial officer, both exited from the company in this financial year. In fact, that was the trigger point for IndiGo. At least from that point, the share prices had seen fall. The share prices started falling for IndiGo.
And this is exactly on the eve of, or exactly on the third birthday of sorts or anniversary of sorts of its listing as well.
Kind of. In the next 1 month, they'll complete 3 years of listing.
3 years of listing. Great. So, thanks for putting that into perspective. Really appreciate. Some similarities between the fall in the past and the fall currently, and additional reasons for IndiGo to do what it is doing. 724 and counting, really. 6 months, it's cracked over 50%. But hey, Interglobe Aviation is not all. There are a bunch of other stocks which are doing the same as well. If September was a bad month, October is not shaping out to be very different. Look at all the stocks that are featuring on the Bloomberg terminal with a market cap over 500 crores, will still show a large number of counters hitting new 52-week lows over the last few days. So just to tell you the selection criteria, that is that all the stocks need to have a market cap of at least 500 crore and are part of the India composite on the Bloomberg terminal. Now, look at this chart here, and that tells you a story. Over the last, 18 or 24 odd months, this is the number of stocks hitting the lows versus highs. And you can see that we've seen periods in the past wherein the number of stocks hitting lows have been high. This period, noticeably this period, but not elongated. This period had some lows. Now, compare that to the number of stocks in the last 1 month, post-September and October, hitting fresh lows. That number has really gone up in trade. Just the number of stocks hitting 52-week lows, and more so in the month of October. Now, some data points will come up on your screen, or actually should come up on the wall as well, if we can get them on the wall. The number of stocks hitting a 52-week low. Look at this. Since September 28, 280. 283. There were brief periods of resurgence. October 3rd, for example, only 48 stocks. But then the slide resumed. October 5th, 162 stocks, 279, 188. So the month of October has seen a bunch of companies with a market cap of over 500. I'm not even counting the tiny tunes, the ones which are sub 500 crores. But the ones which are over 500 crores, therefore have some respectable trading and market cap. The number of stocks hitting 52-week lows is very, very high. And that's a cause for concern, because the index is just down about 10% from where we were. What if this were to correct even further? What if the global markets were to get into a tizzy and these indices start correcting further? Then what happens to that list? That remains an interesting bit to notice as well. Keep in mind, another stack point that comes up on your screen, the baskets of stocks and the number of stocks hitting 52-week lows from various sectors. The surprise out here to a lot of people would be consumer discretionary, and that's the list of names which are now hitting fresh 52-week lows, which is making people wonder as to what's happening to their portfolios. I can understand industrials, that's the second largest pack, and materials, because the business momentum hasn't really come back in a hurry for them, but it is this pocket out here, consumer discretionary, which is leading to a bit of a problem, and financials, the darlings of the market. But because of what's happened to the NBFC space in the last few days, we've had a bunch of these financial names. I mean, we all know about what's happening to Edelweiss, IFL Holdings, etc. All of those stocks are trading at fresh 52-week lows. So these two pockets, which were the darling of the market, in the last 10% fall, they have had stocks coming off and hitting fresh 52-week lows for themselves. So Well, worrying signs maybe, but is it really that tough? Well, for now it is, and can it get worse? Certainly can, because the number of stocks within those pockets which are not at 52 close but approaching those levels is also fairly high, and we may well have that pocket coming off under pressure as well. What is probably going to aid this is a decision by State Bank of India, and we'll get that conversation going up next, because while NBFC stocks by and large have been hitting fresh 52-week lows, a number of them, State Bank of India is probably jumping to the rescue. The country's largest lender will increase planned purchase of portfolios from non-banking financial companies. NBFCs often sell down a part of their loan portfolios after holding them for a stipulated period. Banks, in turn, buy these portfolios to show growth or to meet priority sector lending requirements. This time, SBI's purchase would ease liquidity constraints for some of the non-bank lenders as well at a time of rising rates and very tight liquidity. To talk about what's prompted SBI to take on this step, let's welcome in Managing Director Dinesh Khara, who joins us on the phone line. Mr. Khara, good having you. Thanks so much for joining in. Is this an opportunity, or does it serve two purposes? One, it helps SBI get portfolios at great rates, and two, helps the NBFC space get some much needed liquidity.
Thanks for giving an opportunity to me. I would say that it's a consideration which we had in mind when it comes to all of us are required to meet the priority sector obligations, and when our balance sheet starts growing, it at times becomes difficult for us to get the quality priority sector assets from the market in the underwriting process. So I think I would say that this is an opportunity for us to meet the priority sector targets and also to get a quality book also. And at the same time, our credit deposit ratio as of now is around 66%. So there is adequate headroom which is available for us to ramp up our credit, and I think it comes quite handy. So it's actually a win-win for everybody, win-win for NBFCs, win-win for the bank also. I think it meets both the objectives.
Okay. Would this decision also have happened in part, Mr. Khara, because of the stress in the system too? I mean, one is the opportunity that it presents itself, but two is also the stress in the system and the liquidity space for the NBFCs. Is that also a part reason, or you've only looked at what it brings on the table for State Bank of India?
See, we were doing the portfolio purchase earlier also. But yes, of course, since the opportunity is available, we can ramp up our portfolio purchase. So I will look at it like this. And of course, it comes handy for the NBFCs also. And NBFCs are also keen to monetize their assets and take care of the liquidity requirements. So I think it works very well.
Sure, it does. Would this be the sum and substance of it? Because, I mean, just looking at the way comments are coming in for how much or how longer could the issue for NBFCs last, such rates would be available on these papers for maybe a slightly longer period of time than what people would have earlier envisaged. Would this be the extent of the additional purchases that SBI would do, or from time to time you could actually make such announcements or take such decisions as well?
Yeah, we can from time to time, depending upon our credit deposit ratios. We do spot such kind of opportunities, and we do pump in the liquidity into the system also.
Okay, one last question, Mr. Khara, or maybe the last couple of questions. The portfolios of some of the NBFC paper, as the case may be, for lack of a better word, I'm using the term paper, might be available at a much better rate than others, naturally so. The ALM mismatch fears, if not actual ALM mismatches in certain cases, have also dropped down the rates for a lot of these. Have you kind of distinguished between what is it that SBI will go out and buy? Would it only buy the best quality paper available, even if the rates may be slightly better at some of the slightly lower rung portfolios or papers?
No, there is an evaluation process for the portfolios which we normally carry out before we take a decision in terms of what we will purchase, what we will not purchase. So it's generally quite an elaborate process which looks at the maturation of the portfolio, which also looks at what kind of portfolio is it really, the priority sector, and if it is SME, if it is if it is housing loan within the private sector threshold. So there are various components in the evaluation process. We do look at that, and then apart from that, what will be the NBFC stake going forward? That will also be one of the consideration. Normally, we go for 10% stake of the NBFC also, continuing stake of NBFC, 90% we purchase. So, I mean, there are various modalities which we normally put in place before we decide in terms of the portfolio.
Okay. Mr. Khara, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts.
Thank you. Thank you very much.
That's SBI talking about the step-up of purchases. This may not be the end of it, of course, and if the prolonged pain for NBFCs continues, the opportunity for SBI and maybe one or two other banks might also open up. Whether or not they go ahead and do it is a separate case altogether, but this probably injects some much-needed boost of liquidity that the NBFC sector desperately needs right now. The last piece on First Word today. Free services provided by banks may not be free of taxes according to the GST authorities. This comes even after a government clarification was issued in June stating that such services are exempted from taxes. Nikunjori has the details.
The Indian government has asked about 19 banks to pay tax of over 15,000 crore rupees for free services that they provide to customers who maintain a minimum balance account. This case is being pursued by tax authorities despite a clarification issued by the government which said that free services will not be liable to tax or GST. The tax authorities have asked these banks to pay up GST and service tax for the last 5 years on free services that they provide to minimum balance account holders, and the 15,000 crore worth of tax liability is expected to go up to about 35,000 crore rupees if penalty and interest is included in this. The reason tax authorities are giving for this argument is that banks do earn an income from the deposit that these account holders maintain in their account, and now they've decided to tax the agreement or a commitment that a bank enters into where it says that it will provide certain services for free for account holders who maintain a minimum balance account. The value of the tax would be derived from the penalty that is charged on customers or account holders who do not maintain a minimum balance account, and this penalty has been equated to the value of these free services that are provided by banks. So the tax authorities are asking banks to pay up tax on that penalty amount for those customers who do not maintain a minimum balance account, as well as those customers or account holders who maintain the minimum balance account. Some of these banks who have been issued show cause notices are HDFC Bank, which has been asked to pay up about 6,500 crore rupees in tax, which does not include interest and penalty, followed by ICICI Bank and Axis Bank, which have been asked to pay up 3,500 crore rupees and 2,500 crore rupees respectively. Besides this, tax authorities are also collecting data from about 7 banks and are expected to issue show cause notices asking them to pay up tax on these free services soon.
Okay, that brings us to the end of First Word, but a lot more lined up on IndianOpen. The ILFS crisis and quarter-end withdrawals have spurred the biggest monthly outflow from liquid funds in a decade. We talked to Sivakumar of Axis Mutual Fund about the redemption pressure. And the Supreme Court has banned petcoke imports by the aluminium industry. We discussed the impact with TK Chand of Nalco. But after this break, we take a full tilt towards the day's trade.
Good news, got a promotion and a damn good raise.
Congrats, beta.
वाह, रेज अब तो इंश्योरेंस पॉलिसी ले ले।
कौन सी कंपनी से लूं?
चूज वही जिस पर हो पूरा भरोसा।
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना, same choice. LIC.
LIC, trending with times. 62 सालों से हर generation की पसंद.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. If you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the Year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture $1 billion.
RP Sanjeev Goenka Group, growing legacies.
Hello and good morning. You're watching Indian Open right here on Bloomberg. Quint, a quick setup for you on the Asian market front to see how we are poised for trade this morning. So Asia, slightly volatile. You've got mixed bag session there. Nikkei 225 trading under by about 1/4%, 1/3% given up by Shanghai. Hang Seng, on the other hand, trading 0.5% in the green. Even US equities, for that matter, were slightly more mixed. The technology stocks rebounded though from a 3-day rout, but failed to lead the broader market move. So you've got Dow Jones ending lower, Nasdaq just about crossing the borderline into the green, and a tiny dip for S&P 500. SGX Nifty and our markets, as we set up for trade this morning, up about 0.1% or so, 10,330. But let's take a quick look and see how the setup has been built in from the futures and options point of view. What happened to the premium? I believe there was some amount of shedding that happened in yesterday's session for the indices. Darshan, good morning.
Good morning, Devina. And as you can see, Asia has cooled off. The SGX Nifty, which is trading up by 60 points, has come down to just 20 points at this point of time. Nevertheless, there was long unwinding that was seen on the Nifty yesterday. It managed to, and majority of the crack came in the second half of trade. So open interest was down 4%. On the Bank Nifty, also similar story. You had open interest down 7%, and there was a bigger crack on the Nifty Bank also. So there is selling pressure, no doubt, that's been seen on our indices. Now, what does this indicate? Now, even at this level, the maximum open interest is at the 10,000 put, which means that put writers are keeping that as the big support for the market. And then still at from levels of 10,500 to lower levels, there is put writing that is happening, and we are still below the 10,400 mark in trade. So probably if the market stays at this level, it's the start of the series, but probably unwinding will come in. Put writers are writing in from levels of 10,400 to higher levels. You can see they haven't been very aggressive at 10,200 or 300. Gives an indication that there is a high possibility of a short-term technical bounce back that could come in. Yesterday, the market was weak and call writers were much more active in trade. You're looking at levels from 10,300 right up to the higher levels. Call writers were active. Put writers are still writing in at lower levels of 10,000. No stocks in the F&O band at this point of time, but hardly any change on the Nifty PCR also. The market managed to move in the green for most of the day, but managed to cool off at the end of the day. So most of the positions pretty much stayed the same. A couple of stocks that I want to highlight. First of all, Tata Motors. Open interest was down 6%, so there were no fresh shorts seen. These are the longs that were getting unwound in Tata Motors, so probably could be under pressure in trade today also.
Titan also, after a long time, we are seeing that there is selling pressure in the consumer discretionary stake. Titan was one of the only counters which didn't fall significantly. Open interest build up of 7% on the short side. You had Just Dial, which is seeing open interest build up of 12%, that too on the short side. And the last one is housing finance companies managed to do well. Canfin Homes was one of the few companies that saw fresh longs. Open interest build up was decent at 5%, and the counter moved up 4%.
Right, Darshan, thanks very much for that. So that's the futures and options snapshot for you and the setup for trade this morning. Let's bring in Mehraboon Irani, MD and CEO at Gini Gems Consultants and Investment Advisors. He's joining us on the show right now. Mehraboon, good morning to you. Would be appropriate to call yesterday's trade a little bit volatile if you had to look at it from an intraday perspective. But do you believe the markets are relatively oversold at this point, and there could be, good gems to probably pick into right now?
If you allow me to state that this is a fall which we need to accept the fact that the fall could possibly continue for some more time. A bounce here and there definitely not ruled out. In fact, if it makes an attempt to go up by 200, 300 points also, it's difficult to state whether we have a bottom in place. But at the end of it all, I personally believe that we are in a proper bull market. I think if you go back and check up, the bull market started in 2014, maybe a few months before the present Prime Minister and his party came to power. A lot of euphoria, the market went up. Post demonetization in 2016, the market had a sharp crack on the downside. And again from the lower levels, maybe of around 97, 9800, the Nifty went up all the way to around 11,900 and has now retreated sharply. And this pain is severe. There is too much of blood on the streets, and I think there could be a little bit flow of blood, a little bit more, before things stabilize and before possibly market makes a proper attempt to go up. And it's not going to be easy because we still have major events in India, the noise value, the nuisance value called state elections. Next 2 months we will talk about that, its impact possibly on next year's general elections. But at the end of it all, the economic activity which has started cannot end so soon. And economic activity or economic expansion is the first major sign of what is possibly a bull market. Also, people argue that this is a bear market. For a bull market to end, you need to see a lot of euphoria. And did you see any euphoria in 2018? Nothing. We saw a new high, but there was no euphoria. The market was led just by 8 or 9 frontline stocks. So at the end of it all, I think this is a sharp wave down in a bull market, which has caused a lot of pain. Portfolios are bleeding, 15-20% down in the last 1 month, and maybe 6-7-8% down from the March levels. So this is a sharp crack, and if you are asking me whether we can have a bounce, technical bounce here and there, certainly not ruled out, but some more downside, some more pain, according to me, could still be there. I think the biggest concern for India is oil. NBFC's problem because of IRNFS is another drag. We have the US-China thing, which is still continuing, trade wars, ultimately global growth possibly slowing down. But I think there could be 2 triggers ahead for the next wave of the bull market to start. And that is my personal feeling, is that as we go ahead over the next 2, 3, 4 months, we could see some signs of the best of data coming from US, possibly behind it. They may talk of possibly interest rate hikes not being too aggressive on in 2019. And maybe if we have a clear scenario over here on the political front, that is the ruling party will come back to power. I think these 2 sharp, big positives could make the animal ferocious again for the next wave of the bull market to start.
Right. Mehraboon, we are kick-starting earnings season today. 2 numbers to watch out for. One is Zee Entertainment and the other is a Bandhan Bank. Any of these 2 that you will be carefully watching out for?
I think Bandhan Bank posed the restrictions of the RBI. I think with a clear disclosure when it went and hit the lower circuit, I think I'd advise my investors to buy. I have tremendous respect for the bank and for its management. And I think that was a price to have been bought into, maybe around 40-45 rupees lower than the present level. So it's a clear disclosure over there. At the present level also, I have advised my investors to hold on to their scripts. As far as Bandhan Bank goes. As far as the numbers goes, I really don't know as to what exactly numbers will come. But at the end of it all, at the present price, I would advise the viewers not to be in a hurry to sell off the stock. Coming to Zee Entertainment, I think the stock has retreated well. At the present level also, I'm not saying the valuations are very attractive. There could be some more downside, not ruled out. But in the media pack, I think this would be one of the more interesting names. So my top pick rather in the media pack would be Zee Entertainment. But looking at the present scenario of the market and looking at the valuation, but still is not very, very, very attractive as such. I think I would wait for some more, possibly the stock to shed a little bit more weight before possibly recommending it afresh.
Okay, Mehraboon, stay on. So much more to talk about. Some stocks in news, which we'll ask Mehraboon Irani about. But let's get in our research team to talk about those key stocks in news. Talk about, well, the result season, which Mehraboon was adhering to. And Zee Entertainment comes out with numbers, so talk about that as well. And graphite would be an interesting one to monitor as well. But Shraddha, let's start with you. The key stocks in news today.
So first one is NLC India. They've approved a share buyback and they fixed the share buyback price at 88 per share. That's a 19% premium to yesterday's closing price. Nalco will consider a share buyback on October 12th, so watch out for that one. Healthcare Global Enterprises has said that its associate company will be buying the India medical diagnostic business of Quest Diagnostic. They haven't disclosed the financial details of the transaction, but they've said that it will add to their North India portfolio. You have Carlyle and PNB, which are said to be dropping plans to sell stake in PNB Housing Finance, and this is more to do with the company's valuations dropping. That's the ET report. So negative development for PNB because they were required to raise funds via selling stake in PNB Housing Finance, and it had also been a big overhang on PNB Housing Finance. So let's see how this one reacts. Another ET report says that Diwan Housing Finance is likely to have sold about 5,000 to 7,000 crore of loans to SBI. So possibly, given these moves, you could see some sort of traction in NBFCs today.
Yeah, well, some part of it we saw in yesterday late trade as well. But let's see. A slew of announcements came in post-market hours. Shraddha's right. Let's see if the action continues out there. Thanks for that, Shraddha. Graphite remains a stock in news as well.
Yeah, not a positive development for that counter. The Bangalore plant is expected to be shut down till November end. The company has halted the furnace and it's going to be sequentially phasing that out by October end. And this is expected, the complete revamp, which is ongoing right now, is expected to be completed by November end. And the company expects that the production loss on account of the closure of this unit will be compensated by production at other units. However, it expects the production level of the company to remain unchanged. To just give a little background of where we are coming from on this one is Karnataka Pollution State Control Board in the earlier order while inspection directed the company that there were few emissions level that the company was emitting at that point of time which were above the permissible limit. On account of that, it made few observations and the company in its filing on October 1 said that they have addressed 3 out of 4 observations and they're currently working on the 4th one. Just to give you a little capacity background of what the capacity right now Graphite India is sitting with 80,000 MTPA domestically, 18 MTPA internationally. Well, the Bangalore unit has a 13,000 MTPA, and if you look at the capacities that Durgapur and Nashik has, they're to the tune of 54,000 MTPA, and Nashik is to the tune of around 13,000 MTPA respectively.
Well, let's see what happens there. I remember when the first announcement came in, Graphite India had said that it doesn't contribute too much, etc., so on and so forth. They have some land out there which they can develop as well. So multiple things out here, but prima facie seems to be negative. Let's see how it reacts in the session today. Also important to see what the implications of this on the long-term picture is. Thanks for that, Nikki. And Zee Entertainment kickstarts earnings today.
Yeah, it is. For the Nifty, at least 17% top-line growth is something that we're seeing on and similar number as far as the EBITDA is concerned. So EBITDA margin will be pretty much stable at close to 31%. Now, on the profit front, yes, there will be a drop of almost 32%, given the fact that last time around they had an exceptional. A couple of things that that will drive revenues. First of all, that higher ad revenues this time around, and of a low base last time around, and viewership is expected to be healthy this time around. Ad spends have increased from the FMCG companies that will aid the revenues of the company. Their new OTT platform Z5 is likely to contribute to the top line. Content cost has gone up significantly, and that is why EBITDA pretty much will be at similar levels. As far as what to watch out for, basically we need to ask what's the ad and subscription revenue trends, what is the margin guidance, because now margins have come down to 30%. Initially they were 35 to 33%. So what's the trajectory? Is it now sustainable to stay at 30%? What's the pipeline? What's the trajectory for Z5? And what's the outlook as far as some of the international launches are concerned?
I'll watch out for all of these. Thanks a lot for that, Darshan. So that's Zee Entertainment and what's expected from that company today. Mehraboon, NBFCs now, I mean, DHFL probably has sold part of its loans to SBI, gets some liquidity for their paper. By and large, SBI talked to us this morning about putting in or buying more of the planned purchases as well from the NBFC space, much higher than what was earlier envisaged, and injecting some liquidity into the system too. Where within the NBFC pocket do you find merit in investing, or are you also echoing the voice of some of the brokerages, which is just stay away from NBFCs by and large and invest into banks, corporate facing or retail facing?
I think post Ireland FS, I think there is a concern, definitely a concern, and we see possibly, I personally feel that there will be downgrades coming definitely in the second half, and the impact will be felt possibly in the December quarter and the March quarter as far as numbers go. Now, wherever there is a major asset liability mismatch and companies with possibly low pricing power, I think they are going to be more vulnerable as compared to the rest. Will there be a shakeout? Will there be some consolidation here and there? Certainly not ruled out. But at the end of it all, we need to understand that while earnings will take a hit because the cost of funds will go up, possibly the availability of funds also, despite all possible attempts being made right now to pump in liquidity, the availability of funds, and if it's available, the cost of funds, I think is going to be higher for companies which are more vulnerable, which don't have a great parent, low pricing power. I would say that there could be some more pain. But we need to understand that market is always ahead of us. And quite a few of the stocks have taken a hit of 20, 30, 40, 50% also as far as valuations goes. So I would possibly use this as an opportunity to possibly buy selectively into certain NBFCs, and my top 3 names in this at the levels at which they are, with a possible 5% downside more, but certainly seeing a 20-25% upside from here, a level below the level from which they have come down just about 3 weeks ago. I think I would go with names like M&M Financial, LIC Housing, and HDFC. These 3 would be my top picks among housing finance companies and NBFCs at the moment. Possibly a 4th one would be Piramal Enterprises, because all of them have a decent pedigree, all of them have a parent which will back them, and all of them otherwise don't have a problem as far as asset liability mismatch goes, and they have a fairly decent pricing power. Coming back to Ireland FS, I personally believe the government took the right step in whatever they have done so far, and hopefully 6 months or 9 months down the line, this will possibly be a chapter in India's history, India's financial history. The dust will be settled soon, hopefully. And maybe 6 months, 9 months later, we will look at this patch and say this was one more major incident which happened as far as India's economic story goes. So there are concerns here and there. Market has already punished quite a few of the stocks, and some of the stocks, according to me, because the way they have been punished, possibly provide a decent option to buy from the longer term. The 4 names which I mentioned are the top 4 selections of mine.
All right. That's from the housing finance space. We'll talk more stocks with you on a long-term basis, Mehraboon, but just quickly get in our technical experts as well at this point. Gaurav Bissa of LKP Securities joins us on the show, along with him Chandan Taparia of Motilal Oswal Securities, as you'll see here. Let's quickly run through some index ideas and whether or not there's a trade possible on the index at this current juncture. Gaurav, I'll start off with you. The expectations are that of a technical bounce back. Would you play that trade, or would you probably hold on to a slightly more medium-term view?
Good morning. First of all, I would like to wish you, your team, and your entire viewers a very happy Navratri, and may Ma Durga bring a lot of joy to all of our lives. Coming back to the indices, yes, I do expect some bounce coming in, but there are a couple of things to notice. One, we have been bouncing from 10,200 to 50 zone, but we are yet to see across about 10,400 spot levels. That is going to be acting as a hurdle in the immediate term. So yes, it's a buy on dips market. I would recommend buying Nifty index towards level of 10,240 on the spot side. Keep a stop loss of 10,190. On the upside, 10,400 can be a plausible trade. But if you look at for our next few trading sessions, the ideal strategy would be selling options. One, Nifty is stuck in the range. Second, the VIX index is at a little bit higher levels. Also, we have seen some cooling off in the VIX index. So it makes good case if you sell the IVs here. There's a good chance that you can make money in next trading sessions. On that note, I would recommend selling a triangle for that matter, 10,000 put option and 10,600 call option. Total premium is somewhere around 125. One can keep a stop of 150, play for targets of 80, 85.
test.
All right, selling the strangle there, an option strategy by Gaurav Bissa to play the range on the index. What's your sense, Chandan? I mean, yesterday when we spoke to a few of the technical analysts, they were of the opinion to go ahead and buy the 10,500 call option in anticipation of a bounce back. Is that something that you would go by to, or you would play the range like Bissa?
Very good morning. Wishing you all the happiness on this Navratra to all the viewers, your team, and my friend Gaurav as well. Looking at the market structure, recently Nifty has taken support at 10,200 zone. That is the support at the lower band of the rising channel on the weekly scale that is working well from last 2.5 years. However, market respected to 10,200, bounced to around 200 points. But again, the supply is visible as medium-term trend is in pressure and its market is making lower top, lower bottom. Yesterday, index managed to move up but failed to surpass the previous day high beyond 10,400 zone. So if surpasses 10,400, then only the short-term bottom will be placed. But at the same time, 10,200 could provide the opportunity to hold the support on the decline. So it got stuck in a range. But yes, if manages to surpass 10,400, that more conviction will be there in the market. As of now, if it sustains about the same, then only the go for aggressive view for the positive side. But here, yes, the way it has taken support at 10,200 can go with the bull call spread rather than only going with the 10,500 call. Because now there are two scenarios that VIX may form the top if market has to form the bottom, because VIX and market is negative correlation. Recently, the volatility index made high near to 2160, 2165 zone, and yesterday fell down by around 2%. So if VIX goes below 18 level, then sure, volatility will hurt the option premium, and the premium of calls and put both will decline. So to get the positive to range bound view, one can go with the call spread by taking one lot of 10,400 and selling one lot of 10,500. So overall, the range bound bias with support of 10,200 zone in the market.
All right, got that. So both option strategies coming in, spread strategies from Gaurav Bissa as well as Chandan Taparia. We'll come back to your individual stock ideas in just moments from now, but onto our special segment, Bloomberg Edge, where Jayesh Kilnalni tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Jayesh, what's the stock this morning?
Morning, Devina. It's Yes Bank that the terminal has in fact thrown up, and that is because the stock has seen a rebound of more than 35% from the recent low that it had actually formed. And with that, what actually happened is the MACD has turned positive. Let's have a look at how the MACD functions and what are the conditions that you have to look for. It shows you the relationship between two moving averages of the 12-day exponential moving average and the 26-day exponential moving average as well. There are two lines which get plotted, which is the MACD line and the signal line. Now, what it actually does is it helps you to identify where the turning points in a particular trend are actually there. And the conditions for buy and sell, you have to watch out for a crossover between the two lines which get plotted, and depending on the direction of the crossover, you get your buy and the sell signal. Let's have a look at the chart of Yes Bank. Now you can see that the stock actually saw a sharp fall from about 200 or 400 odd levels to less than 200, and you can see the sharp fall that we have had, and with that the MACD also declined. But the stock has in fact consolidated for a few days and recovered and come back to levels which it had actually fallen from. The bottom panel will show you that the MACD has also made a rounding off pattern, and with that the blue line has in fact now crossed above the white line, which gives it a buy signal going forward.
Okay, what about the efficacy of this, Jayesh? And I mean, does any other indicator work better for Yes Bank, or is this one of the better ones?
So Neeraj, this is one of the better ones because in the last 1 year, if you had bought all the indications, despite the big fall that we have seen, net profit would have been cumulative of 21%.
All right, Jayesh, thanks very much for that. Let's quickly go across to our experts and get their trading ideas on specific stocks. I'll start off with you, Gaurav, on your call on IDEA, and you're selling KSCL.
So for IDEA, it has seen good amount of correction. It saw small bounce back. I'm not playing for a reversal as such, but if you look at the yesterday's data, a minor amount of correction has been seen. It's given a small breakout sort of on early charts. On option side, we have added some call options on 35 strike options. There's a decent chance that we can expect 4 to 5% up coming today itself. With a stop of 33.85, one can buy IDEA futures for target price of 36. If that is held, even 38 would become possible by tomorrow. And KSL is looking weak. It saw a tremendous pressure a few days back. We saw a rebound happening towards the 510, but again, that has been used as building fresh short positions, and now it's given a very immediate support level of 480, 482. The roads are now open towards the level of 450, but I would not play for a single day fall towards those levels. But if the markets are a little bit choppy, this is one vulnerable name that can be on the radar with a stop loss of 487 when you can sell KSL futures for target price of 465.
Chandan, what about your ideas?
Yes, first trade will be buy on Oro Pharma. We have seen some support-based buying in selective pharma counter, including Oro, Lupin, Sun Pharma, and Dr. Reddy. And comparatively, Oro Pharma is the strongest counter, has been moving in a range. We have not seen major decline comparatively respecting to its 50-day exponential moving average. It is at the verge of giving the breakout from a symmetrical triangle pattern. On last trading session, the stock surpassed the immediate hurdle zone and witnessed some short covering by 4 to 5%. So all the database indicates the positive stance of the counter. So recommending to go long with wider stop loss of 748 and expecting it to move towards 805 to 815 level. Second trade that will be on SEC. We have seen oral formation of lower top, lower bottom formation in the counter. Major immediate trend is on V pressure, but a bounce is being sold. It has broken the multiple support of 1505 on the case level and holding below the same. 2 days back, it has turned from 1435, 1440 zone, but again fell to surpass 1500 level and corrected. So expecting these kind of negativity or the bounce back are likely to sold. So recommending to sell on bounce back move with a stop loss of 1505 and expecting it to go towards 1440, 1420 zone.
Okay. Some queries that we'll take with Mehraboon Irani is with us. I would want to get Mehraboon in a bit later on what is it that he would be looking to buy from a long-term perspective. But Mehraboon, firstly, a broader view on some of the insurance companies, they have fallen. There is a query, of course, that has come in for Max India, Max Financials, kind of falling in that pocket as well. What are your views here?
My views remain the same, I think. I think this business will keep on growing, but there is going to be not too much of positive impact as far as margins goes. And I personally believe, despite the fact that this business will grow, I think it will become more and more crowded. I think not very comfortable recommending any of the stocks in the insurance space, and I have never recommended any stock in the insurance space because somewhere I am not able to understand or possibly justify the valuations which they are enjoying at the moment. And I would compare it as of now, with a clear caveat that I may possibly change my view some months later. But as of now, I think I go back to the telecom days, early telecom days, where people were just gung-ho about it, thinking that the space is going to widen and widen and the players are going to enjoy tremendous margins. So from that angle, honestly, comparing it to what happened in telecom years ago, I think not very comfortable recommending them at the moment, despite knowing that the market will keep on growing. Recommending the stocks from an investment angle, at least not at the moment.
Sorry, I missed that, Mehraboon, but even Max India and Max Financial?
The view remains the same.
View remains the same. Okay. Mehraboon, some of the companies that you've liked in the past, they've come off. I want to talk about one particular name, Sterlite Tech. The stock is now at 280. Agreed, the growth is great, but the valuations are not cheap even after this fall, FY19 or FY20. Would you be comfortable allocating fresh capital, or would you believe the market scenario has become the way it has, might be better to wait for lower levels?
Super question. The way you put it, brilliant, Neeraj. I would put it this way, that if you look at the way the market behaves, especially when the market falls, it starts punishing the growth stocks. You need to understand that the market always looks at things over the next 6 months. And in that wisdom, quite a few of the stocks commanded a valuation which you could defend at that moment. But suddenly when things come off and the market is punishing growth stocks because of higher valuations, I think you start feeling that, oh, this could lose another 10-20%. Even at the present level, Sterlite at 280, 282, can it lose a 10-20%? Well, I'm not ruling it out. But at the end of it all, I stand fully convinced that over the next 18-24 months, growth which I see, I again see a price of 350 to 400 or even higher coming. So a portfolio, you see a lot of blood. You see a stock which was at 380 just about a month and a half ago, coming down to 280. You own 5%, 7% of your portfolio in that. That is down by 40-45%. It creates a lot of pain. In that scenario, buying again at 280, despite the fact it's 100 rupees lower, with the thought, okay, oh, what if it bleeds more? Puts you off. And in a market in which there is so much of leveraged positions otherwise in the FNO segment and all, and people are virtually losing money every passing day, there is too much of supply coming in all stocks which people are holding because brokers are demanding checks for the losses which people are suffering otherwise in the FNO segment. So with so much of supply coming, quite a few of these growth
I'll just
stocks.
come back to you, Mehraboon. Actually, we've got market pre-open just a few seconds from now, so we'll come back, for you to finish that answer. But just 16 seconds left to go for market pre-open. A quick setup of Asia that's looking slightly more negative now, except for Hang Seng, which is trading up at 35%. For SGX, no major cues coming in there. Flattish, just about 0.1% or so on the upside. 10,328. It's important to watch the currency because yesterday again we had a record low of 74.39. That's the index for you, Nifty 50, which is opened positive in the session, closer to about 1% or so, 0.5% now, 10,356, 34,493 on the Sensex. Individual stocks, interesting to pull up a Tata Motors and a Titan, two of the counters which had a steep gash in yesterday's session. Tata Motors bled out about 13%, seems unchanged as of now at 184, and the other one is a Titan. So after yesterday's 8% cut, the stock takes a knock of another 2.5%. But the list of losers is pretty limited in today's session, at least in the pre-open. BPCL is down 1.6%, HCL Tech is down 1.6%, Tech Mahindra loses about 1%, IOC is down about 0.5%. But the gaining stocks, Indiabulls Housing, that's up about 10% right now in intraday trade that we are seeing. They've increased their effective lending rates for builder loans by 100 basis points. TCS is up closer to about 2.5%. Power Grid has moved up about 3.5%. Maruti Suzuki, Bajaj Finance, Axis Bank. Remember, Bajaj Finance in yesterday's session saw an incremental uptick in the last 1 hour of trade. HDFC Bank, NTPC and Hero Motocorp is also up about 1%. The rupee is of key interest right now. It seems to have opened slightly stronger, so 74.16 on the currency.
Aviation names, just want to pull them up. Jet Airways is showing a 10% uptick. I don't know about Interglobe Aviation, which is actually also showing about a 5% uptick. The talks about government wanting to reduce excise on airplane fuel, subject to election commission's permissions. Now, all of that, until it happens, you don't know it's happened or no, but the talk of it, just the mere talk of it, is leading to some upticks in some of the aviation stocks in trade yesterday. Beaten down pack is seeing a bit of a bounce. What else? NBFCs seem to be doing okay. Diwan Housing 9.5% higher. There's some company specific news. The Economic Times is reporting that they've sold about 5,000 crores to 7,000 crores worth of paper to State Bank of India. Loans to State Bank of India, stand corrected, excuse me. That stock is looking higher. Bring up Edelweiss, IFL Holdings, Canfin Homes, etc. They all went up in trade in last half an hour of trade yesterday. And let's see if there's further uptick there. SBI has decided to pump in or buy additional paper from portfolios from the NBFCs, much higher than the earlier envisaged figure, injects much needed liquidity into the system. Not big reactions. There's a big reaction in Indo count. I don't know if it'll last or no, but looks like starting off on a positive note, as does NLC India and Nalco. They're going to consider a share buyback. The stock for now seems like starting off 10% higher. We'll get the management in at about 9:45 to talk about this and more, but Nalco looks like could start off on a positive note. What is not doing well? Indiabulls Ventures, no surprise. Bombay Dyeing, no surprise. 8K Miles, no surprise there. IDFC Bank is at 32, so that's corrected a little bit, and VIP is at 370, so that is correcting a little bit. Oberoi Realty, another real estate name that has corrected quite a bit in the session today, but it could well be about NBFCs and select aviation stocks in the session today. Okay, Mehraboon, before we get to Samit Sarkar for the top brokerage calls of the day, you were just finishing your point. If you can just make your point about Sterlite Tech.
No, I personally believe it's very important because I experienced it over the last 20 years. Whenever market takes a sharp crack, the growth stocks, the stocks which suddenly are perceived as very rich valuations, and Neeraj, you said it. Growth is very good. Even today, difficult to defend the valuations. I would agree with you in this market scenario where you start questioning a valuation of 20, 25, 30 times PE. I think you do feel that, oh, the stocks were expensive. I think look at a stock like Shankara. Virtually everybody on the street wanted to buy at 1,600, 1,800, went to 2,100, now at 1,050. If somebody wants to buy 2 lakh shares, I promise you at least there will be 5 more people who will come and dump 2 lakh shares to him. because suddenly the stocks are perceived as having very rich valuations. Nobody is questioning the growth. Look at DMart. Everybody was coming out of the buy report at 1400, 1500. The stock will be at 2500, buy it and forget it for 5 years. And I distinctly felt at that point of time, a stock like a DMart, which I felt is very expensive. I still feel it's very expensive. One of the most well-managed companies, super pedigree, will do well, no doubt about it. But you will have earnings keeping on growing for 1, 2, 3, 4 quarters, but the stock will do nothing. And then your investor will come and ask you, what's happening, boss? Earnings are good, stock is not going up. And you will say, oh, the stock had run up ahead of earnings. So I would say this type of scenario in the market, you have stocks like a Sterlite, like a Shankara, like a Quest Corp, like a DMart, possibly losing weight despite the fact that the earnings keep on growing. So from a longer term angle, I think Sterlite at 280, 82, whatever the price was yesterday, I still believe that the stock will deliver lovely positive returns to clients, to my clients as well as to investors over the next 12 to 18 months, while not ruling out another 10% weight being lost if the market comes down to the level which I believe the worst possible scenario of 9,800 or 10,000, from where the second wave of the bull market has started. So if market sheds another 300, 400 points and Sterlite is 10% lower, so be it. So that is the scenario right now. But telling aggressively a client to buy into Sterlite at 280, a client who has seen a price of 380, 400 is not the most easy proposition for an investment advisor like me, neither for a client to possibly buy into the stock knowing that I had seen it at 380 just 15 to 20, 30, 40 days ago. And I've already lost 100 rupees. And you are saying that it can lose another 30, 40 rupees. I'll wait for the 30 rupees, 40 rupees fall to come. But I do believe, Neeraj, that the results will keep on growing. And I will not be surprised if people come and aggressively start recommending the stock at a price higher than the price where it is today, maybe 6 months down the line.
Okay, that's the view on Sterlite Tech. Let's before we get to some other ideas, let's get in Samit Sarkar, who joins in the top brokerage call for the day. Samit, good morning.
Good morning, Neeraj. On the big brokerage calls for the day today, we have is Bank of America Merrill Lynch on graphite electrode makers. Now, for HEG, they have initiated a buy rating with a target price of 6,700, which suggests a potential upside of nearly 108%. While for Graphite India, it's a buy rating with a target price of 1,550, which suggests a potential upside of nearly 96%. Now, the brokerage is expecting record earnings from the graphite electrode makers not only for this year but also for the next year on the back of strong global demand and supply constraints. Now, for HEG, it says that the company is the purest play on the global graphite electrode profit boom. Now, it is also expecting the company to generate strong free cash flow, and which would help the company to not only expand its operation but also it will lead to higher dividend payout. Now, it is expecting a dividend payout of close to 30 to 40%, which would imply a dividend yield of close to 8.5% on the stock price. Lastly, it says that it sees a substantial value in the stock as the valuation multiples are below prior troughs. For Graphite India, it says that it is the largest graphite producer in India and is the cheapest graphite electrode maker globally. And it also says that it is extending the extended period of high profit for Graphite India has not been priced into the current valuation, and it is expecting the company to generate close to 2,500 to 3,500 crore of annual free cash flow, which could mean a higher shareholder return going forward.
All right. I want to go back to our technical guest. Thanks a lot, Samit, for joining us with the brokerage calls. Two stocks, Titan and Tata Motors. After yesterday's plummet, what would you do, at least from a trading perspective, Chandan?
See, looking at the Titan, it was forming some divergence but failed to surpass the multiple hurdle of 820 and corrected sharply. However, on weekly and daily scale, it is forming the head and shoulder pattern but failed to surpass above the same, so weakness could be there. Looking at the Tata Motors as well, continuously making lower top, lower bottom formation. And the way stock is falling, it doesn't show any kind of resilience as of now. The next major support comes near to 177 and 165 kind of levels.
All right, that's Tata Motors and Titan. Just want to go across to Gaurav with a walk hard. This is a query that's coming in from a viewer. Is there a possible trade on walk hard, Gaurav?
Walk hard, yes. If you look at the overall pharma space, that is one sector that is still holding to the breakout levels. There's small support on the weekly charts as well for the pharma index. On that front, Wockhardt Pharma can be used as a buying opportunity. It can test levels of 530, 535. If those are held, we can expect some more upsides coming in. It's been trading in a downward sloping channel on daily charts, taken support from those levels. Last 2-3 days, it has made a low of 475, 470 if I'm not wrong, and it's been bouncing from those levels. So using stop loss at 475, one can buy Wockhardt Pharma on the upside. 530, 535 can be the first target, and if that holds, this may transfer to a further up move.
All right, and Chandan and SBI? Chandan, SBI?
Yeah, looking at the PSU Bank, however, SBI has been consolidating in a range, but we have seen selling pressure in most of the PSU Bank, including PNB, Bank of India, Bank of Baroda. So compared, if you look at the SBI, the stock has been moving in between 255 to 280 zone. It got stuck in a range. However, call writing and put writing both are visible in the counter. It is forming some sort of consolidation band. So as of now, it's in a neutral range or no trading zone. But yes, if sustains above 270, then only I'll take for an upward towards 280 to 285 kind of levels.
And certainly aviation, as the pre-open rates have settled down, seems to be a pocket which will likely do well in trade today. All the aviation stocks look like starting off on a positive note. Let's tell you, the minutes of the market open, let's tell you all that you need to know to stay ahead in trade today. Let's begin with Zee Entertainment. The content provider will begin the second quarter earnings for the Nifty 50 companies today. Other key earnings include Bandhan Bank and Indiabulls Ventures.
SBI will be in focus today. The bank has stepped up target to purchase good portfolio of assets from non-banking financial companies. SBI may buy additional portfolios between 20,000 crores to 30,000 crore rupees this year.
High cost of funds has led to Indiabulls Housing Finance hiking effective lending rates for builder loans by 100 basis points.
In key brokerage calls, Bank of America Merrill Lynch has initiated coverage on graphite electrode players. The brokerage implies a potential upside of 96% for Graphite India and that of 108% on HEG.
Fidelity acquired 3.5 lakh shares of TCNS Clothing via block deal yesterday at 590 rupees a share.
And lastly, Carlyle and PNB drop plans to sell stake in PNB Housing Finance as valuations have dipped. That's according to a report from Economic Times.
Okay, 3.5 minutes left for markets to kickstart trade. Mehraboon, Irani, just a very quick thought on aviation. Are these stocks giving an opportunity or would you stay away?
Honestly, I would stay away unless I feel that I will be a very successful fleet-footed trader, because the levels at which they are, and if it bounces, you could get a clear 5, 10, 15, 20% returns also in the very short term. But as a story, I would like to still stay away. There is a problem as far as pricing goes, and as far as the aviation turbine fuel price goes also, the government will take steps at the end of it all. It's very difficult as of now to define as to what exactly will transpire, and it's very difficult to define as to where oil will ultimately make a top.
All right. Technically though, is there a trade on aviation, Gaurav?
I would not like to take a trade for the reason that they have been quite volatile. A few days back, we saw Jet Airways bouncing from levels of 185 to 205 in the same day. The very next day, it fell towards the level of 180. So it's been breaching crucial support levels, and I don't think one should be trying to put a trade in such a volatile environment in these names. I would skip those names, stick to the levels, stick to stocks that have given a breakout or bouncing from the crucial support levels. That will give you alpha.
Other names like Maruti, which are now trading sub 7,000. Quickly, Mehraboon, is Maruti a value pick for you at these levels of 6,700 odd?
With a clear disclosure, I think looking at possibly advising the clients Maruti at a price below 7,000 rupees this morning. Honestly, that is on my thought, worked on it yesterday. And yes, at below 7,000, it definitely offers scope for a long-term appreciation.
Right, so Mehraboon likes the stock sub 7,000. We've got about 2 minutes left to go for market opening. Let's quickly get the top technical calls from our experts. Let's start off with you, Gaurav Bissa. What's your top call for the day?
It would be KSL for the reason that we have seen Nifty finding some pressure at higher levels, and the similar kind of pattern has been seen in KSL as well. At higher levels, it's been seeing significant selling pressure. So that would be my bet. 465 would be target. If that is breached, it can see much lower levels.
All right, Chandan.
Yeah, already I've discussed Oro Pharma and SEC. One on the buy side sale and the second on the sell side, but here Oro Pharma can be preferred as it is at the verge of breakout, can see the momentum towards 805. One can buy with a stop loss of 748.
All right. Mehraboon liked it fundamentally. Maruti at 6,700 for a day trade. Is it a good idea? Chandan?
Looking at the price structure, it is continuously making lower top, lower bottom on the weekly scale and also falling down. So if it sustains above 69.50, then only I can understand that the stock is forming some bottom, because continuously or gradually it is falling down. And in fact, we have seen selling pressure in entire auto basket. So if it moves over 69.50, then only we can understand. But yes, it has gone into the deep oversold territory. So some risk reward is favorable. So one can look at the same.
Okay. Chandan as well as Gaurav, we leave it at that. Many thanks for joining in today and giving us your thoughts. Mehraboon, stay on. We'll just take in one final thought from you post-market open as well. But just about getting ready to kickstart trade, 25 seconds. Remember, the pre-open rates have suggested we'll start off marginally higher in trade, about 1/3%. Maybe the Sensex could do even better. So let's wait and watch if that happens. The key would be what happening to the mid-cap and the small-cap end of the market, and whether the NBFCs, which showed some spunk in trade yesterday, can they actually do more in the session rate? That will be the key question. Anyways, we'll get to know about it moments from now. Getting ready to kickstart trade. Watch out for the Sensex. Pre-open indicated 0.5%. And 0.5% or thereabouts it is, about 1/3% actually. So more stable now for the Nifty and the Sensex. The Nifty Bank about 1/4% as well. So in and around that 1/4% to 1/3% for all the key indices. Bring up the mid caps and the small caps and see what they are doing in the session today. About 0.5% for the mid cap index, the small cap index 0.4%. Not a bad start. Should be a fair tick of green on the screen. On the heat map as well, should come up on your screen. We should have a fair bit of green, to be honest. Yes, we do have a fair bit of green. Not too many losers, that's the key thing. IT maybe marginally lower, but no news out there. On the gaining side, NBFCs on the index too, by the way. Bajaj Finance as well as India Bulls Housing Finance are out there in the top gainers list. Autos bouncing back. Tata Motors, Eicher, Hero MotoCorp, all of them bouncing back in the session today. Some gains for a Kotak Bank and a Yes Bank from the banking space. No big winners, but for the big boy from the NBFC says Bajaj Finance back at 3% higher. So was down sub 2,000 just 2 days ago. In fact, cracked all the way to 1950 or thereabouts. From there, Bajaj Finance for now is showing a remarkable bounce back. Let's wait and watch if that lasts or not. Just very quickly, a couple of trends before I hand it over to Devina. As we speak about 1/4%, remember, for all the key indices. But firstly, some of the NBFC names which started bouncing back in trade yesterday. Let's see if that's happening further. Edelweiss, a couple of percentage points higher. IIFL, flattish but with a small tick of green, and DHFL for company specific reasons as well is up about 6% in trade. Is the same luck for aviation as well? Is there a cut coming? Might come, might not come, but for now on the chatter, all the stocks are up and about in the session today, and Nalco on the buyback plan should also be doing well. So even though the index is just up about 1/4%, a bunch of stocks moving up very, very strongly. What are you spotting, Devina?
Well, NCL India is one stock which actually tops the charts in the broader markets. The stock's trading higher by closer to about 10% odd. Okay, I think the NLC, I'm sorry. NLC India. That's the one that's 9% higher on the back of board approving the buyback about 88 rupees per share. Nalco you already highlighted, but Divan Housing Finance has moved up closer to about 6.5% odd. Shriram Transport Finance is up about 5.5%. Rain Industries is up 5%. Vakrangi over the last 3 days actually has opened positive with gains of closer to 3.5%. Today also 4.5% higher. Equitas Holding is up about 4.5%. You've got a GM Financials 4.5% higher. L&T Financial Holdings is up 4%. We already spoken about aviation, but Interglobe now trades 4% higher. TVS Motors is up 4%. Tata Motors DVR, that's up about 3.25% right now. Bajaj Hindustan, remember yesterday there was a flurry of activity in the sugar space. So just to highlight that once again to see if it's continued, Bajaj Hindustan is up 2.5%. Berhampur Chini, Dhampur Sugar, Mavana Sugar, whether it's pretty similar there, no, it's probably just a little bit more stock specific this time around. But in terms of losers, on the broader market count, we've got India Bulls Ventures down 5%, Central Bank of India down 5%, Bhushan Steel, that's down 3.5%, Vodafone Idea is down 3%, and a Prestige Estates loses 2%.
Okay, interesting. Mehraboon, now one final thought really before we thank you. Are you buying into any of the oil marketing companies?
Well, clear disclosure, I think we bought, or rather I advised my clients to buy into IOC. The stock was doing well till the time this particular mishap happened. At the present level, don't have the guts to possibly come out and advise my clients again, though I do believe that at the levels at which they are, ultimately investors will make money. But right now, people are virtually becoming very skeptical because ultimately they believe that there was an intervention on part of the government. So while I do not wish to comment too much on that, because that really took care of inflation, which prompted the RBI governor next day not to hike rates, which ultimately is the RBI's main problem, is inflation. So I think on the whole, it could be a good step, but it did dent, or did create a major dent, I would say, on investor sentiment towards all marketing companies. And after the hit, is there value in it? I do believe yes. Though I still believe that I'm feeling a little bit short on it to possibly recommend it right now. I think we have taken a hit as far as IOC goes of around at least 10-15% from the level at which I advise my clients to buy. And after that, honestly, I don't feel that I have the guts to possibly recommend it again to them. Though I do believe that people who have never bought oil marketing companies at the present level, I think there could be money for them over a little longer term.
All right. Mehraboon and Irani, thanks very much for joining us. Really appreciate you taking out the time and sharing your thoughts and views. Time to get in another prominent voice. Pradip Shah, chairman at IndAsia Fund Advisors, joins us on the show right now. Pradip, good morning to you. Too many moving parts, from the market for the markets to take cues from. But just a simple question, how do you set yourself up for this kind of a market environment? Do you brace yourself, for the further decline in light of all the negative news that's floating around, or probably just sit on the cash that you have and use this as an opportunity?
So I think clearly the uncertainties are still not over. We anticipated many of these. We've talked on your show in the past on the global front as well as some of the macro issues. Now the election uncertainty is one of the biggest uncertainties that we face. If we can resolve part of this Iran sanctions issue by having barter deal, as has been reported, that would be wonderful. It would help control oil prices globally, and also, of course, help us in terms of our balance of payments and so on. What really brings to my mind this need for the government to be proactive on micro reforms, not the big ticket reform. They've done the GST and so on, but now on ease of doing business, ease of administration for every individual and business people. So for instance, so many small things that are hurting us. We talk of this current account deficit, and in the past it's our remittances that have helped us. But just look at one scenario. We have $126 billion of non-resident deposits. FCNR 24 billion, 90 billion of deposits under the non-resident external account, but only 14 billion from non-resident ordinary account. Why? Because we have a 30% TDS at source. Now it is the NRO route that brings remittances in a large measure. Make it easy for people to send money, earn a little higher interest, continue deducting tax, but not at 30%. Not everyone pays tax at 30%. There are marginal tax rates which are much lower for those people. And so they don't, they fear that they will not get refunds. So they don't bring money. Advance the bringing of money into the country. Little measures that can be done in a big way. We had this FPI circular by SEBI, which fortunately got amended. Why did they have to bring it out in the first place? There are so many little things, well-meaning initiatives, I presume, from the government's bureaucrats, but they hurt markets. And that uncertainty remains unless the Prime Minister and the government demonstrate that they're on top of this. I think we will face uncertainty. So best at this time, this election uncertainty adds to the problem. A little more liquid rather than less, unless you see compelling buying opportunities in individual scripts. And there are some. In the B group, 32% correction from calendar year, beginning of this year. And certainly there are some very attractive opportunities that are visible, but they are not for mass markets, they are for individual, they are not for mass the fund managers. These are for individuals and for high net worth families.
Pradeep, while we will come and talk to you about the specific pockets where you find the interest building, does the broader market sell-off the quantum of the sell-off, the propensity of the sell-off, and the duration of the sell-off in the broader markets, and the time period over which small caps have corrected bother you, and the quantum?
Yes, it does. You see, you had a 19 point something, 20% correction in small cap scripts in September alone. The Nifty and everything is corrected dramatically in September. Clearly, the scale of correction has been too rapid. Too rapid means it's taken the markets by surprise, and it has its own consequences. And then we compound them with problems that are of our own making, such as these surprises in defaults, for instance, ILFS default and so on. And in the meantime, the insolvency and bankruptcy code processes are not moving as efficiently as we want, and yet more companies are being put into the IBC code. So this clearly the system is failing our citizens just now. I think less bureaucracy, less government intervention, less intervention in markets, more market orientation from bureaucrat side can ease this problem. At this time, this duration is likely to continue because we have this election uncertainty now. With 5 election results coming out in November, clearly we have to worry whether there will be some negative messages received by the markets, whether the present government will continue to receive the kind of mandate, or will continue to get the mandate that they got last time in its next central elections. Those are issues which necessarily must be factored in by any investor.
Mr. Shah, good morning. Neeraj here. What do you make of the recent tightening of sorts that's happened in the NBFC space, while SBI has come out and announced that they will purchase a higher quantum of paper and portfolio in order to inject, I mean, for their own good, but that injects some much needed liquidity in the system as well. Does that ease up the pressure, or do you reckon that the pain of liquidity crunch in the NBFC space and therefore subsequent growth could well continue for an indefinite period?
See, one of the negatives for the NBFCs was a statement made by a deputy governor that NBFCs would have to look more towards other sources of funds than banks. Now here there was a symbiotic relationship. Banks were not able to originate as efficiently loans in certain segments of, whether it's personal loans or microfinance or whatever. And so they found that it was convenient for them and efficient for them to lend through NBFCs. Now that system suddenly, if it gets shaken up or on the margin gets reduced, then clearly the lubricant, which is finance, for the economy to move will be affected, and therefore that will cause a grief for the markets as a whole. So we are seeing that the NBFC message has been received badly, that you have to raise money from other sources. The SBI message is saying that, look, yes, you are good at originating, we'll buy good loans from you. And I think there is no choice but for the public sector banks, which are garnering deposits because of the confidence that the government is behind those public sector banks in an unprecedented manner. And so they will have to deploy that money somewhere. They can't just put it in government securities. They'll have to deploy it in lending. And here is one opportunity to buy loans from NBFCs, or otherwise originate loans directly to individuals and consumers and so on themselves. Now that efficiency is not yet visible in the public sector, and the private sector just cannot supply the needs of the market totally. So we will see, I think, the public sector banks definitely lend in directly or indirectly to the NBFCs. I don't think it can be dramatically reduced.
So would you believe, okay, that's part one of the puzzle. Part two of the puzzle would be, in these relatively difficult times, even if the PSUs were to lend, we have to admit that these are relatively difficult times than what they've enjoyed in the preceding 2 years. So in these relatively difficult times, would the consumer financing companies which have a shorter duration on both sides fare better as opposed to the ones which are used to borrowing short and lending long, the likes of housing finance companies or infrastructure finance companies?
So not all housing finance companies are borrowing short and lending long. Yes, on the margin, they all got tempted because the money markets were good and so on, and they all built up sizable amounts of borrowings from the short term. But otherwise, typically they were borrowing from the National Housing Bank or public sector banks and then lending out, and deposits had gone out of fashion anyway. So this correction is a healthy correction. You remember 2008 crisis in the United States. It came about because the money markets got frozen up, and this short-term lending and short-term borrowing to lend for long-term collapsed, and that caused the greatest grief in the US. And I think we've avoided that by bringing it to attention through through problems of the ILFS and so on. However, what we need to realize is there's still vulnerability. These money market funds, they have attracted huge amounts of money. They have been deploying also in a different way. Some of them are taking risks on a longer term basis when they should not be taking risks with liquid funds in longer term instruments. So that correction also, I think, it has been salutary just now. We've seen a drop of almost 10% in money market funds assets, as it were, liquid funds assets. And it is a recognition that people can pull out money quickly, because when they see that LIC mutual fund has 740 crores exposure to ILFS, certainly the other guys who are in the LIC mutual fund will say, let me pull out my money before the net asset value reflects that loss. And so they start pulling out. This is exactly what has happened. And I think there is both sides, on the lending side as well as on the borrowing side, recognition that borrowing short and lending long is not the right thing to do. It has to be more matched. I think it's a good salutary lesson. I hope we don't have any further crisis of this making. What we have had has been good for us, a good lesson for us.
Right. Pradeep, just one last question before we let you go. Value buying, according to you, lies within which pockets? I mean, we've been seeing sectors like pharma, IT, gaining from tailwinds of the currency move, but in particular, something that you've got your eye out for.
So I think the pharma sector, the IT sector reflected what we were talking about earlier, that people realize that we are able to provide solutions to global companies and at a cost-effective price, and with the currency drop, then we are even more competitive. In the pharma sector, there are many Indian pharma companies that have that competitive advantage. They have the ability to produce reasonable quality. The attitudes have changed. They are very GMP conscious, and so they can possibly continue to be leaders in supplying generic products to world markets. And they're diversifying away from US markets. Now, China is a great opportunity for India. So, for instance, Dr. Reddy's is addressing the Chinese market. Other companies have not yet cottoned on to that. I think we will see the pharma sector reflect this competitive advantage in the share price also. They've fallen dramatically because the sheen was off the US market for some time. I think come FY19, calendar year 19, CY19, we will see that again the US buying reflects the competitive advantage of Indian pharma companies. So pharma sector definitely is one. Some of the metal sectors got beaten up. I think just now the domestic economy demand is doing well. I hope the uncertainties of election and these interest rate rises and so on do not affect demand. If the demand continues like it is, and the minimum support price program, the NREGA program, all help in creating demand. So if demand continues, I think some of these scripts look very attractive to me.
Okay, Mr. Shah, we'll leave it at that. Thanks so much for taking the time out and joining us today and giving us your perspective. Really appreciate your time.
Thank you very much. Thank you.
That's an important voice, Pradeep Shah of IndAsia Fund Advisors. We'll have to take a break on that note. The markets are doing reasonably okay. 0.5% higher for the Nifty and the Sensex and the Nifty Bank too. But on the other side of the break, an important discussion. Remember, the ILFS crisis and the quarter-end withdrawals have spurred the biggest monthly outflows from liquid funds in a decade. Now that we've had a day or two to analyze this, we'll speak to our Sivakumar of Axis Mutual Fund about the same. And then Supreme Court has curbed pet coke imports by the aluminum industry. We discuss the impact with Mr. T.K. Chand of Nalco.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, रेज. अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, बट पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC ट्रेंडिंग विद टाइम्स 62 सालों से हर जनरेशन की पसंद.
RP Sanjeev Goenka Group, growing legacies.
Back with Indian Open right here on Bloomberg Quint. Remember, September was a bad month for mutual funds with a net outflow of 2.3 lakh crores, where liquid funds, where corporates typically park the money, worst affected. Other categories like the income funds were also impacted in a big way. So, what's the implication that we can draw out of very high outflows in September versus some staggeringly high inflows in the month of August as well, especially in the liquid category? And now that we've had a couple of days to digest the news, what's the eventual outlook on all of this? Let's get in a very important voice, Mr. R. Sivakumar. He's head of fixed income at Axis Mutual Fund, joins us right now on the show. Siva, good morning, and thank you so much for taking the time out. People that I spoke to on the day of this data coming out mentioned that the number was unusually high, yes, but what's also not happened is that the inflows that typically happen after the outflow at the quarter end have not been that high too. What has been your experience, and what have you made of these two staggeringly high numbers, the outflows in September versus the very high inflow in August?
Yeah, good morning. And you're absolutely right. The number looks very large. And you're also equally right that the August number was quite large. So, when the August number was not really commented on, it does look like what September is just a payback for the previous month. And the net impact of the two is of the order of maybe a 30 or 40,000 crores negative, which is not really surprising given the size of the liquid fund industry. So I think it's normal to see the third month of a quarter seeing outflows. September is that third month. You see some outflows, advanced taxes, and typical quarter end liquidity tightness. And of course, this time we have seen some amount of additional tightness on two factors. One is some amount of credit market issues, and second is, I think, post the RBI intervention on FX, there's been a significant tightening in money market liquidity. So there's been a combination of factors, I think, leading into this quarter, which has led to some unusual tightening. But I think it's not very, it doesn't seem to be very unusual in terms of at least rates. Markets have been reasonably well behaved. And to some extent, what we see in the month of October in the first week or so is, yes, inflows have not been as high as before. Once again, this could just be a reflection of the fact that system has been reasonably tight in terms of liquidity.
Could it be as simple as corporates parking their money in the month of August into the liquid and the credit funds in a big way, then taken by surprise as to what's happened and the pace at which the IL&FS crisis unfolded, and therefore withdrawing that money in the month of September?
Well, that makes sense up to a point, but the point is that in credit funds, you don't see this kind of short-term inflow outflows. Typically, investors stay for years, not measured in the inflows and outflows are not measured in days. So that kind of short-term flows are usually seen in liquid and other very short duration products, the ultra short or low duration type funds, where you do see larger movements in space of maybe days or weeks. So my expectation is that this is just you had a lot of liquidity perhaps in July or August, which led to inflows coming into these schemes, and then we have seen that kind of pulled back. The credit market conditions, of course, would have led to some concerns with some investors. I don't see the September closing as unusual. We'll have to wait and see whether the inflows resume this month. It's often the case that maybe first 1 or 2 days, not necessarily indicative of the whole month. But my expectation is things are normalizing. We have seen trades beginning to happen in the NBFC space, etc. So it's not that the markets are shut. I think it's just taking a few weeks for the entire market to settle down.
I was about to ask you that as my next question. You kind of preempted it. Conversations seem to suggest that after the first 1 week of a bit of a no-show, there are reasonably large number of conversations and trades happening in the last 2 or 3 sessions. What's been the experience at your fund? What's been the experience amongst your peers that you might be talking to as well?
Well, I think broadly for the markets, the most important thing is that just the noise dies down a little bit. I think there was this fear that, especially after ILFS, maybe a month or now close to a month and a half ago, that this issue could just spread and become systemic. Clearly, what the last few weeks tells us is that these are idiosyncratic, which is to say, affects one company or one group, and it is not a systemic problem of liquidity or credit events. And therefore, it takes a little bit of time, maybe a week or two, for this noise to die down and then the markets start functioning again. We must also remember that absolute overnight liquidity is still plentiful. So we have the overnight rate, the CBLO rate as we say, is trading at maybe about 6/4, 6.30 against the official repo rate of 6.5, which suggests that at least overnight liquidity is plentiful. It just needs to move from just the overnight cash into money markets. And I think that transition is happening in the last couple of days, and my expectation is it will continue to happen.
Siva, we did see reasonably large-scale redemptions, not necessarily at Axis MF, but at the other mutual funds in the month of September, with reason, of course. I'm not saying that was without reason. My question is that behavior continuing in the month of October, wherein redemptions have been large in mutual funds, or you think that fearful redemption behavior is no longer there?
See, the first flush fear is played out, and in the sense of, at least in terms of whatever outflows we should have seen, which means that those who were, shall we say, reacting to news or reacting to rumors have acted also. We're not seeing any sort of follow-up. Obviously, like I said, it's not like there are any further credit events in the market. So what that means is that things are kind of calming down, and it will take something else, a new trigger, if we were to really see outflows. What we see right now is, yes, there might be a small flight to safety, so you might see money moving from higher risk products into lower risk products. That's normal when you have an event like this. But eventually, we see that, despite these rating actions or these credit events, what you see is that it's, again, I come back to the point that it is not systemic, and funds which are not exposed or ones which have low exposure to high risk entities will continue to see flows. We've seen this time and again in the past.
Okay, one final question on this topic, and then I have probably one on rates. But my conversations with some of the AMCs seem to suggest that for a select few NBFCs, they are not keen on rolling over the paper on maturity. I mean, without getting into names, but kind of figure out what those 2 or 3 entities would be. My question to you is, do you believe that AMCs by and large would, for lack of a better word, shun the papers of a lot of the NBFCs, or is it restricted to about 3 or 4 wherein there could be fears, but the papers of some of the other NBFCs, even at a better rate, of course, would find acceptance in the mutual funds?
Sure. What you see over the last couple of days is that rates and spreads are almost back to normal. So first of all, the markets kind of come back. But what you also need to remember that there will be some reduced rollover of the CPs this time around, simply because AUMs have fallen and they have not probably gone back to previous peak. So to that extent, if I had X AUM and I'm down maybe 10 or 15%, then I will need to roll over 10 or 15% less this quarter. So that's fair. My expectation is that it will be less of a rollover. The second thing is a lot of NBFC borrowing, and not just NBFC, many corporates who borrow in the CP market do so because they have a rate advantage to borrowing from a bank. Now, if CP rates go up in the market, that it makes sense for them to borrow from a bank, they will just switch borrowing. They are not going to pay higher rates in CP market just to access the CP market. The CP market acts as a low-cost borrowing mechanism for these entities. The moment the CP market stops offering that lower cost, it makes sense for all of these entities to go back to other forms of financing. So I think there will be some of that substitution. You will see maybe a drop in CP issuance and higher bank finance in the near term.
Would the RBI's comment also lead to that, Siva? And that was my question really, because I think the views of the market is split in two ways as to what Viral Acharya and then the other Deputy Governor had to say with regards to the ALM mismatches. But I thought that the conversation the comment was largely for NBFCs which are borrowing short, lending short, and long, predominantly in the infrastructure space. What did you make of that? And does that alter the landscape for NBFC lending in a meaningful way? Or is it only restricted to a select bunch of non-banking financial companies, predominantly in the infrastructure financing space?
I would think the reaction is exactly from that point of view, that they don't want to see infrastructure financing. You don't build a road by financing using commercial paper. But we don't see that from most of the NBFCs. We do see reasonable asset liability matching. Of course, there will be some mismatches, and if RBI steps in to correct that, then it's very good from a debt investor's perspective, of course. I can't speak for equity markets, which may be disappointed because they love spreads, and therefore CP borrowing to lend long may give them higher spreads. But as a fixed income investor, as a bond investor, I'll be very happy to see lower risk coming from ALM mismatches. So this just is one step that RBI could easily take to reduce risk in the NBFC sector, and that's be very, very welcome from us. Of course, it might mean that the overall supply of CP may drop in favor of other long-term instruments, but that's fair. But we would really be happy to see if RBI steps in just to reduce risk in the debt markets.
Interesting. What's the view on rates, Siva? I mean, I'm guessing everybody was surprised with what the RBI did. We haven't had a chance to talk to you post that. But there is ample opinion out there about 2 more hikes in the next 2 meetings. What would be your base case view?
So our call has been that RBI is on a rate path, although we have maintained that they have some time on their hands. And what RBI demonstrated just now is they're using that time to reassess. They have put in 2 preemptive hikes already. That's not a small move. And now they have clearly said they are on a tightening path, which again is something I think consistent with what they have been doing over the last couple of policies. Now, having said that, one thing very clear that comes out to us is RBI is saying that the currency market cannot be the driver of rates. We saw the RBI move rates in response to a currency event in 2013. That was a spectacular failure. And then we've seen other countries in Asian region, for example, Indonesia, but also if you go further afield and look at Argentina, Argentina has raised rates to 60%. And yet their currency is the worst performing this year. Interest rate, I think it's very wise of RBI in a sense to say that rates cannot be a tool to manage currency. So look at domestic factors. And what's happening on the domestic economy is inflation has been undershooting RBI projections for the last 3 months. They have a lot more confidence now that they may be able to keep inflation below 5%. And that's giving them some room to pause on rates to see how the inflation trajectory evolves. And I think it's good that RBI sees it from this angle. We must remember that in the medium term, that is to say when you measure in years, currency is driven more by growth than by rates. And if RBI takes care of financial conditions and ensures that growth is there, with low inflation that is, then overall we should be very happy with the rupee performance 12 months or 24 months down the road.
Okay, let's wait and watch how it shapes up. But thank you so much, Siva, for joining in today and giving us your thoughts. Really appreciate your time. Don't all of us want to return to normalcy soon? By the way, there's some bit of normalcy to the markets, if I can call it that. big move, 0.8% uptick for the Nifty and the Nifty Bank. The Sensex up 0.7%, predominantly by the financial names. Or actually, maybe I'm wrong, but the Bajaj twins for sure are doing well. Bajaj Finance is up 7.5% at 2208. Bajaj Finserv up about 4%. Within the financial names, I think I'm seeing some gains at ICICI Bank, so that is doing reasonably okay for itself. And then the auto pack has bounced back today. Maruti Suzuki up about 3%, so 6,900. Hero MotoCorp up another 2.5%, doing very well for itself. Bajaj Auto up about a couple of percentage points, so that is doing okay for itself. Some gains for Zee ahead of the numbers, up about 3.5. Bharti Infratel back to 275. It was down to 250 at a point of time in the last 3 days. It's back to about 275. Titan, as I said, has moved back higher as well, so good going. But Bajaj Finance is the leader of the pack, really, up 7%, 2207 and counting, so really strong move there. Any losers? I think lack of losers also aiding this move, because Infosys and HCL Tech just done about, and Yes Bank down about 1% apiece. But that aside, we don't have too many losers in the session today. What about the broader end of the spectrum? The mid caps and the small caps should just come up on your screen for a moment and just see what's happening there to those indices. Firstly, 2% for the mid caps, 2% for the small caps. Smart rally that has come in into these names. Muthoot Finance is up about 7%. Edelweiss at 159 seems to be doing okay. Equitas about a couple of 6 percentage points higher. Piramal Enterprises at 2,300. So some gains that are coming in for a bunch of these names. VIP is up about 5% in trade. Radico Khaitan up about 5% in trade. So a lot of those mid-cap names which had been beaten down out of shape are seeing some bit of buying happening in the session today, which is actually not bad news. What else? Stocks trading at 52-week high versus 52-week low. Let me just try and pull up that list also for you. Hardly anything at 52-week highs, to be honest. I mean, no stock worth talking about. Stocks at 52-week lows, and that list is fairly long, even in a session like this today. I mean, forget an SK, 8K miles and the likes. But amongst other names, Mercator continues to grind lower. That one is down 20% today. Mercator Lines, am I wrong? No, it is down 20% today. So that one continues to grind lower. There is Insecticides India, which is down about 1.5% to 2%. So that is also trading weak in trade. So a clutch of names have these issues. Maruti Suzuki standing out really, really well for itself. 6, 8, 8, 9 and counting. We'll try and touch base with Nalco in a few minutes from now. Remember a few talking points for Nalco. The Supreme Court has allowed CPC import to the tune of 0.5 million tons a year by the aluminum industry. Norsk Hydro SA is ready to restart its alumina refinery at 50% capacity, which could hit the alumina prices. And Nalco has announced a buyback, as a result of which it's up about 5% in the session today. The volumes too are significantly higher. It will be important to get in Mr. TK Chand to talk about what is it, why is it that they have decided to come out with this decision. Key news, of course, is that the CPC import to the tune of 0.5 million tons a year by the aluminum industry would be something that will impact the aluminum companies for sure. Nalco's requirement, CP coke requirement, is about 2 lakh tons per annum. Let's get in Mr. TK Chand. He joins us right now to talk about this and more. Mr. Chand, good having you. Thanks so much for taking the time out. What do you make of this announcement of the CPC import? I think about 0.5 million tons a year by the aluminum industry. Mr. Chand, can you hear me?
Yeah, I'm able to hear.
Okay, great. Mr. Chand, good morning. Thank you so much for joining in. I was trying to ask you about what do you make of this announcement from the Supreme Court to allow CPC import to that cap of 0.5 million tons per year for the aluminum industry?
Yeah, Supreme Court's direction that CP coke import they have allowed, but they have put a cap. Probably the cap which they have given that may not be sufficient for the industry. And we will be again representing on behalf of aluminum industry that the cap may have to be increased, because CP coke is an essential input for making of the anode, and that is also not a fuel that is used in anode for the purpose of smelting. So therefore there is a need that this cap need to be increased, and for which we will be giving a representation on behalf of Aluminum Association of India.
Until that happens, sir, what's the impact on you as a company, on your cost of production predominantly, if this is where the cap stays?
Yeah, right now it will be going on okay, but if it continues with this cap, then there could be a shortage in domestic market of pet coke for anode purposes. Then it will be a difficult situation.
And could it lead to a price hike by CPC players as well, given that the aluminum industry, I think, if I read the numbers correctly, about 65 to 70% dependence on the domestic CPC industry for its requirement?
Yes, that is there, the dependence is there, but right now the position will be of not much of concern, but if the situation continues like that, then it will be difficult.
Okay. What about pricing by and large? I think when the Alunorte refinery was, and the earlier belief was that it won't, and then the subsequent belief that, or subsequent announcement that 50% capacity restart might happen, it's brought about a fluctuation in those prices as well. What's your assessment of how prices could move in the near term?
The prices of, you are meaning prices of alumina?
Yes, please.
Yeah, the prices of alumina has been fluctuating because of the different developments, like Alunorte refinery announcing it's closed down, and again it is starting with 50%, and then Alcoa strike. All those incidents have had different kind of impact on alumina market. But right now with Alunorte refinery operating at 50% capacity, there will be shortage per month around 3 to 4 lakh ton of alumina in international market. That will keep the prices of alumina firm, and we are expecting that the prices of alumina will remain in the range of $525 to $600.
Okay, what's the current billing rate for you as a company on alumina? I mean, what would the current alumina prices be?
Current tender we had got 541.
Okay, and you believe the range would be about 521 to 600. The reason I was trying to ask this, Mr. Chand, as you would appreciate, I think in an earlier conversation you've said that every $10 increase would have a profit of about 85 crores for you on an operating level. So, which is why important to get that clarification. Fair call. You've also given an announcement of a buyback. What's the reason for the same, Mr. Chand?
Relating to buyback?
Yes, please.
Hello. Yes, buyback, we have received intimation and we have also discussed that matter. We may be exploring various possibilities, and we may probably be going for some buyback.
Would you have any idea about, I mean, or I'm sure you have an idea, but is this a large one or is it a token buyback? Any thoughts here?
No, it cannot be a large one, because already Government of India percentage have come down to 56%. So therefore, it may be a limited percentage of buyback.
Any ballpark estimate of how small would it be, Mr. Chand? Not getting into exact numbers, but just an idea, rough idea.
Yeah, it could be somewhere in the range of maybe 5%, like that it could be done actually, of the net worth.
Okay, but you won't have exact clarity, so let's not really talk too much about it. My one final question to you, Mr. Chand. Rupee, the way it is coming off and hitting new lows almost every single day, what impact would that have on you as a company?
But depreciation of rupee has a positive impact on Nalco, because Nalco has a strong export arm, and for every rupee going down, company gets a EBITDA contribution of 157 crores of rupees on an annualized basis. So the rupee going down is proving to be good for the company, because it's a highly export-oriented company.
To assume, Mr. Chand, then that the quarter gone by, which has also seen a fair bit of rupee depreciation, would mean the quarter gone by would turn out to be a very good quarter for you because of all of the factors that we mentioned, including the currency?
Yeah, quarter one we did well, and in quarter two also our results are under finalization and it will be put up to the board. And we are expecting also a similar performance in Q2. And with the given market condition in Q3, we are expecting that the performance will continue in that line.
Raising your guidance, sir?
Pardon?
Are you raising your guidance?
When I am not able to hear you.
I was asking if you are raising your guidance for FY19.
FY19, we will be, when we are estimating that we will have a EBITDA margin of around 27 to 28%. So it will be a good performance because H1 already, whatever results we have been estimating, it will be a very good performance in H1. So similar, generally it is expected that in H2 performance becomes little better because of the seasonal factors. So we expect that this in 18-19 performance will be quite better and EBITDA margin may be to the tune of 27 to 28%.
Okay. We'll leave it at that, Mr. Chand. Thank you so much for taking the time out and joining us today, and all the best for Q2. We'll talk to you post your results.
Thank you very much.
That's Nalco talking about the Supreme Court decision and a few other factors, including the buyback too. The market's in very fine fettle, 0.9% for the Nifty and the Nifty Bank. To wrap it up on this leg of Indian Open, up next is the FNO show.
Good news, got a promotion?